Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report where I will show you the technical situation, and also we'll talk about fundamentals, and obviously we will look for decent trading occasions on the market. First, as usual, as always, actually, we have to check the macro calendar because today we do have non-farm payrolls, actually quite a lot important events. Let me just filter out. Okay, Friday, non-farm payroll day, in 4.5 hours, increased volatility. Attractions for the forex traders. Apart from non-farm payrolls, we do have average hourly earnings and labor force participation rate, and we do have data from the Canadian job market, and also Fed's Powell speech. So a very important event as well. So attraction still to come on the American dollar. We will have some nice movements, hopefully. As it is a Friday, so it would be nice to check what is going to happen next week. If you will open a position today, it should be relatively safe, because over the weekend and on Monday or Tuesday we don't have anything important. As you can see here, on Monday and Tuesday the calendar is relatively empty. Attractions will start on Wednesday, because on Wednesday we do have inflation from China, and we do have speech from Reserve Bank of Australia Governor Mr. Love. And we also do have industrial and manufacturing production from UK. Wednesday we will finish with very important data from America, from US, CPI, so consumer price index, so inflation. We are expecting 2%, last one was 1.8, so we expect an increase in inflation in United States. On Thursday, just ECB monetary policy meeting accounts, and on Friday, index of consumer prices. Well, I don't think it will be so super important. So next week is relatively calm. So everything should we should be more focusing on trade wars between China and US. That probably will be the main topic on the markets, this escalation of the trade wars, or maybe we will see an ease of the tensions between those two countries. That being said, let's look at the charts right now, and we will start with European dollar to Canadian dollar, which was having one of the best price action setups recently, right? So we had a beautiful uptrend. This beautiful uptrend finished with a head and shoulder formation, with a left shoulder, head and right shoulder. We broke the neckline, and we broke the uptrend line. We tested the uptrend line as a resistance. We broke the neckline, horizontal support. We tested this horizontal support as a resistance, and the price aimed lower. The main target, let me just change the color here. The main target for this downswing is here, is this red area and the long-term uptrend line. In the meantime, we can stop here on this green support, but the real main target is here, and the chances that we will get there are relatively high. We should eventually get to this support. And that is on this trade you see the beauty of price action. And actually with price action technique you can go against the trend. It's not only trend continuation, but you can go against the trend if you see something like that. Because only seeing like a divergence on RSI with a double top, this is nothing. This is not a significant trading signal, but this what I showed you here, breakout of so many important supports and technical formations and broken trend lines. This is enough, more than enough, for the price action trader to go with a short position. Even if since the beginning, in the middle of February 2017, so over a year, the price is going higher, even with that. And New Zealand dollar to American dollar was having a nice buy setup, but the price is going lower. I call that a buy. Well, probably it will be a mistake. We will see. We are still fighting for this support and we are still above this support. Once the price will break the orange area, the positive sentiment from this setup will be denied. The positive sentiment was created by the fact that we had a false breakout from the support. The support was defended and we broke the midterm downtrend line here and we were about to test it as a support. Right, so the buy signal on this instrument, on New Zealand dollar to American dollar, was coming from those price movements. Next one is Australian dollar to Japanese yen. On many pairs with Japanese yen, what we are seeing is an inverse head and shoulder formation. On some of them they look better, on some of them they look worse. Here it looks alright. It looks alright because this inverse head and shoulder formation is created on a long-term support which was important even in June 2016, and it was important in April and in May and in June 2017 and then in March 2018. It got eventually defended. That what was below was a false breakout. We broke the neckline, we broke the horizontal resistance. We tested the neckline, we tested the horizontal resistance as a support, so now everything is ready for a strong upswing. And this is our view for Australian dollar to Japanese yen. Next one is New Zealand dollar to Canadian dollar. Also, I think that New Zealand dollar just played with me. I thought that there is a buy signal here, but why? Again, head and shoulder pattern, price did not manage to go down. If the price does not want to go down, most probably it will go up. We have a breakout of the upper line of the wedge. The price did not go below the neckline here, so that was a buy signal, which is a trend continuation pattern, so we should see a further upswing. What the price did is the price came back below the upper line of the wedge, came back below the horizontal support, cancelled the buy signal from here, created a false breakout here, and now we do have a sell signal on New Zealand dollar to Canadian dollar, which has a potential target here. So not very far. It is not a long-term, mid-term trading opportunity. It is more of a short-term trading opportunity. But well, after that, after the breakout is possible here, so we will see how this situation will develop. Next one is euro to British pound, which is having this sideways trend after the breakout of the midterm uptrend line. As long as we stay below this green area and the upper black area, the sentiment is rather negative because that's a trend continuation pattern. Trend is bearish, so we should see another test of this orange support on the 0.87, well, slightly below 0.87. Now three very interesting trading occasions. First one is the head and shoulder formation here on the cable, broken, so that's a bearish formation, right? Sell signal was triggered here as we broke the neckline. Then after the breakout of the neckline, what we got was a wedge formation. Wedge is a trend continuation pattern, so downtrend started here, so this formation was promoting further drop, especially that the top of the formation was in the same time a neckline, so that was a bounce from the resistance created by the neckline. We bounced from the neckline, we broke the lower line of the wedge, and the price went significantly lower. We aimed horizontal support here, we aimed horizontal support here, and that is not a beautiful double bottom formation, because actually if you want to be strict, the second bottom should be lower, but well, it is not a typical double bottom, but it is a double bottom. It is a double test of this horizontal support. And we saw a bullish reaction here, we see bullish reaction now. Will it be significant to stop the price from testing the red line? Is red line important? Well, it is super important because it is a long-term uptrend line which is connecting higher lows from the beginning of November. So it is a very, very important uptrend line, and it would be nice even for the uptrend if the price would test that. Any bullish formation here on this red line would be a very, very strong buy signal, and would be more than welcomed by the buyers. We had this head and shoulder formation, we had this wedge, but actually in the long term what we are having is a flag formation, or maybe even another wedge. Let me just change the colors here for the better visibility. And this instrument really liked those formations. Like you can see that here. This is a wedge. This is a flag. This is a very big wedge. So we may have another one. In this situation, price breaking the upper line of the wedge, but then breaking the neckline is a super strong buy signal. And it would be nice to see that. We would have the signal even faster here, but for this I would like to see the bounce from the trend line and then breakout of the wedge, and then buy signal would be present. If they want to go now, I would need another confirmation of the breakout of the resistance, because if they want to go without testing the trend line, I need another confirmation. American dollar to Canadian dollar, that is a very nice situation, and we were expecting, actually we are telling you about this head and shoulder formation since the beginning of since somewhere here, since the end of March, as far as I remember. There is a left shoulder, there is a head, there is a right shoulder, there is a breakout of the neckline. This neckline was tested as a resistance. That comeback was a bit deep, so many traders were probably scared about the false breakout, but eventually it worked out and the price went significantly lower. So we broke the horizontal support, we broke 38.2, and we are going down and down and down and down, making lower lows and lower highs. Today, today, as you can see, the price is trying to climb back above the neckline, but they are struggling. It is difficult for them to climb higher. So for now, the sentiment stays negative, and we do see bigger chances for a further drop than for the upswing. Price closing above the blue area will be a cancellation of the sell signal here. Canadian dollar to Japanese yen, inverse head and shoulder formation, left shoulder, head and right shoulder. This is one of the best price action setups which I saw recently. Well, there were setups like here on euro to British pound, which I opened short position. That was awesome. We have euro to Canadian dollar, where I also do have a position, but here is also this Canadian dollar to Japanese yen, which I don't have position on, unfortunately. It is because I do have a position short position here, so I don't want to increase my exposure on Canadian dollar. One short position, so one position with buying Canadian dollar is enough. I also do have a short position on Japanese yen, so I didn't want to double my exposure on yen and on Canadian dollar. But why this setup is beautiful? First of all, let me show you what is this green support. This green support is a long-term support created in April, May and June 2017. And we touched this support recently. We touched this support in the middle of March, and this created a reversal. Formation, which you can see here, is an inverse head and shoulder formation, so a left shoulder, head and a right shoulder. In the meantime, we broke, at the end of the March, we broke the midterm downtrend line. Then we tested that as a support. In beginning of February, we broke the neckline, and then we tested that as a support. Also, in the same movement, we broke the horizontal resistance on 82.75, and we also tested that as a support. So those three resistances were broken, and after the breakout, they were tested as supports. This is the beauty of the price action trading. One more thing also, you could see here possible flag. Flag got denied because we broke the upper line of the flag. So sellers had one small chance to continue the drop, but they failed. So this is an ultimate setup. What I mean by ultimate setup, that according to price action rules, everything here points north. Everything points here for the further upswing. Everything points here for the rise. Every single factor from the price action trading is bullish. I will leave you with that. Next one is New Zealand dollar to Japanese yen, where we are having a very similar setup. So we are on a long-term horizontal support. The price is creating inverse head and shoulder formation, left shoulder, head and right shoulder. We broke the neckline, we broke the midterm downtrend line, we tested those two as the closest support, and the price went significantly higher. This is a very, very nice buy setup as well. British pound to Japanese yen is still having a negative setup here. Because we are in a downtrend, we broke the long-term uptrend line, we are creating a flag, and there is a possible breakout here. But the thing is that there is still a buying pressure, and on smaller time frames, what we are having here is a rising pressure on this resistance, and slightly below the resistance, the price is creating something like a flag or a wedge, which is indicating the willingness for a further upswing. I think that many traders, those traders who sold here, they have their stop loss orders here. So price getting there will activate those stop loss orders, and those stop loss orders for the short position is long position, is a buy order. So price getting there, we will activate those orders, and we will see a strong directional movement. But first we need to see the price getting there. But in my opinion, a buy stop order here would be a nice idea, because there is a rising pressure on British pound to Japanese yen, which indicates the possibility of a breakout. Euro dollar, broke this mid-term uptrend line, long-term uptrend line, and is now aiming for the horizontal support. And this is small intraday, maybe not intraday, but small movement. Not. I'm looking for something more like this is 50 pips. Not satisfied with 50 pips, but the chance that we'll get there, we'll test the orange support, is really high. Swiss franc to Japanese yen. As you could see on many instruments with yen, we are much higher. On many instruments with yen, we broke the neckline, we broke the horizontal resistance. Here we did not. So Swiss franc is a bit weaker, and there is no willingness to buy Swiss franc at the moment. This occasion is interesting from the technical point of view, but if we look at the big picture, like on the rest of the instruments, this setup is already active. Here it's not. So when you look at from this angle, this situation is no longer interesting for you, right? Because you don't want to buy a weak currency, because in Japanese yen is weak, but Swiss franc is weak as well. So if you want to go against Japanese yen, it would be better to buy stronger currency, like Canadian dollar, for example. American dollar to Australian dollar to American dollar. This flag is getting more and more beautiful here. There is that is a flag in a downtrend, so we should see the breakout of the lower line of the flag, and we should see the test of this lower line of the channel up formation. And a bullish formation here should be a strong buy signal. American dollar to Swiss franc. Here you can see how Swiss franc how weak is Swiss franc, because they had a wedge, which is a trend continuation pattern. We should see a continuation of this trend, but we did not see a breakout of the lower line of the wedge, a breakout of the 38.2. Instead of that, the price broke the upper line of the wedge, which is always less likely to happen. So we can see that there's a really negative sentiment towards Swiss franc, and the price is aiming higher. They broke 50% FIBO, used that as a support, and now they are aiming 61.8. So yeah. American dollar to Danish crown. What we are seeing here is a sideways trend. We are still waiting for the breakout from the sideways trend. Breakout here should point us a direction, should point us a direction for the future movements. I wouldn't be too happy with this breakout of this downtrend line, because it's rather meaningless with this type of price action after the breakout, especially that we do have this horizontal resistance here. So if you want to go now after the breakout, fair enough. If you want to go after the breakout or from this sideways trend, fair enough. But I think that the real buy signal will be created once the price will break the green line. American dollar to Singaporean dollar. Well, there was a rising pressure on this horizontal support on 1.3075. We even had a wedge, which is like a introduction for this, but the price failed to break the lower line of the wedge. The wedge is cancelled, so we can remove this. I think we can also remove this and put another level here. The real buy signal will be created once the price will break the green area. So far we are below. Let me change the color here, because that's an upper line of the descending triangle, and as long as this descending triangle is on, we do have a sell signal as long as this red line is respected. British pound to New Zealand dollar. Flag got cancelled. Horizontal support is still defended. The situation is not clear. Remove. Gold. Long-term situation on gold is neutral. As long as we stay above the $1,307, situation is positive. As long as we stay below this, there is no buy signal, right? Currently, we are trying to defend some support in the meantime. $1,322. We will see how the situation will develop later. Bitcoin, new lows, lowest level since the beginning of February. We are slowly getting to the point where we will test $6,000. And this is our view for Bitcoin for a long time, so we shouldn't be surprised. Since we bounced from $11,200, that is our view on Bitcoin. So almost we are about to lose almost 50% of the value, which is huge. WTI created a beautiful hammer on this support, which is a trend line, and then fails to break the resistance. There is a positive signal, there is a positive sentiment as long as we stay above the uptrend line. Breakout of the uptrend line will be a negative sign and an invitation to go south. DAX is below the midterm downtrend line, which is also a neckline, or the neckline of the head and shoulder formation, or the neckline of the triple bottom formation, does not matter. What matters is that breakout of this line triggers as a buy signal, and as long as we stay above the blue area, the sentiment is relatively positive. FTSE was cancelled the sell signal here, cancelled the sell signal here. So we are above 7,100 points for FTSE, which is super important level for this instrument. And as long as we stay above, the sentiment is positive. It all comes from the S&P 500 and other American indices, which defended strong horizontal supports. And S&P 500, it happened at the beginning of the week, and we defended 2,550 points. And after that, the small euphoria started, and the price is climbing higher and higher. So on the major indexes in the world, we do have a cancellation of negative sentiment, and there is a positive approach. Excellent, guys. Thanks very much for attending this webinar. We have some decent trading setups. I don't usually trade on Fridays, but there are some occasions which are very attractive. I have to admit that some occasions are very attractive today. So maybe it will be a good idea to open something, especially that, as we saw on Monday, Tuesday, nothing will happen, so probably those movements will be continued. In the meantime, you should visit our Twitter account and our website, alpay.news. Thanks very much and goodbye.